Thank
Good
you.
morning, everybody. Welcome back to the Opportunistic Trader. It is Wednesday, November 14th, and we're joined by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going today,
I'm
Phil?
doing good. I'm doing great, man. I'm gonna start. I'm gonna get Larry Benedict to print T-shirts for everybody that said "I survived the biggest sell-off in oil history." I think everybody should get a copy of that and do it. I mean, it's been
Well, the
incredible,
day
huh?
is young. The day is young, but we are green right now. We're up
Yeah.
$1.23, and we're
hmm
trying to snap. Is it 13 days in a row?
Yeah, this would be 13 days in a row. It's 12 days in a row. It's never happened before. And I was on Fox all day yesterday, early this morning, and my take on this is we're either seeing the oil market predict one of the biggest slowdowns in history in the global economy from peak to valley, that we're going into a major recession, or this is the most oversold market in history and it's a screaming buy. In fact, it is the most oversold market in history. Based upon the relative strength index, this is the most oversold the oil market has ever been, ever. In fact, if you look at the VIX index, the crude VIX index, it's at a 2-year high. So the fear is crazy. And the question you have to ask yourself is how much is real, how much is fake? What's a fair price for oil? Are the guys that were pushing it up to $77 a barrel, 30 days ago, right? Or are the guys that are trying to push it down to $42 a barrel, right? Um, and right now, from what we're seeing, we think it's overdone to the downside. We don't think that the global economy is in dire straits, though you have to respect the market. I mean, when you see this kind of a sell-off, you got to look at it and say, hey, what's going on here? A lot of people were pointing to the fact that OPEC raised their production forecast. They lowered their demand forecast for the third time. The International Energy Agency kept their demand forecast the same. They raised their production forecast. But the numbers that we're talking about, the difference in supply and demand really doesn't equate to the type of price drop that we've seen. And so unless these numbers are going to get substantially worse, which neither OPEC or the International Energy Agency is predicting, then we're probably looking at a screaming buy.
So
If it
then let's move
continues,
on to
yeah,
scenario two then.
yeah,
If it's
yeah.
not necessarily the global economy is not collapsing, it's not necessarily the data, it probably
hmm
means somebody got caught with the wrong position. Is that what you're hearing? And if so, what are
We
you
are
hearing about
hearing that.
that?
We're hearing that a major hedge fund is blowing up, and and he's the wrong way on both oil and gas, is what we're hearing.
So you are hearing it's more of a spread where they might have been short nat gas, long crude.
Right, which was basically what the fundamentals were suggesting earlier in the year, and some big money funds apparently were the wrong way on both, and you get them blown out, which could be exasperating the selling. So we're hearing it is a lot of liquidation going on, which is, if you look at the open interest on the sell off, it's been selling, it's falling, not rising. So that kind of goes to show you that more than likely, this isn't a lot of new selling coming in the market. This is a lot of fund liquidation. And when you get into that type of a situation, um, we know that the snapback can be pretty incredible on this market. So you have to be really, really careful.
But I guess the
Um,
question also is how much more unwinding do they have to do? And they probably were not alone. There's probably other funds, and so it's a question of is there further unwind?
I mean, based off history, it's possible. And seeing that we're in unprecedented territory as far as the sell-off goes, you have to be careful and you have to respect it. Um, but even when you get this speculation and these funds unwinding, you get beyond this a little bit. Um, you got to look at the fundamentals, the underlying fundamentals, and the damage that a sell-off like this does to future production. And if we start to see these prices continue to sell off here, whether it's speculative or not, it's going to hurt U.S. energy output. There's going to be people that are going to basically take money off the table the banks are not going to lend the shale producers any more money. Their cash flow situation is already terrible for most of these. The rigs are going to start slowing down. We're going to start to see these rigs start to come back in, and then that basically is really going to hurt this market.
Yeah. So let's shift over to natural gas. We've seen an explosive move on the curve in spot. We were just trading under $3 probably a month ago. We initially broke up to about 325, hovered there for a few weeks, and then we've really exploded from up to 350, and then this morning we traded up to almost $5. What are you hearing there?
Well, I mean, we've heard some of this is fund liquidation as well, but some of it is an interesting, scenario when it comes to the supply and demand situation. And Mike, you and I have talked about this for the last month. I was saying basically, this market is in a very precarious situation. And I said, if we get cold weather, this market could explode to the upside, because of the false assumption that the market had that record production could meet any demand that we threw at it. And that was the mantra in this market. It's like, hey, we're producing a record amount of gas. We're opening new pipelines. I don't care how cold it gets. We're going to be fine. We just have to get to shoulder season and everything's going to be hunky dory. That record production is going to build up inventories. Well, that never happened. We had a warmer than normal summer, and all of a sudden we flip a switch. We're already getting winter-like temperatures in November. And the storage situation is at the lowest level it's been since 2005. And the problem that you have with that is that in past years, when we got into a situation like this, we would just, the power generating companies would just flip to coal. The problem is we've taken away all of our excess coal spare capacity. And so anybody who could switch to coal has already done it, which is scary because where do you go to now if we continue to see this record demand for natural gas going forward? We don't have the capacity to ramp up production. So what could happen is that for the first time in history, we could draw down EIA storage down to zero if it gets cold. I mean, we will run out of storage. We will not have enough if it continues to be cold, which is kind of a scary scenario. What that means is that we're going to have to dramatically cut our record exports potentially. We may get into a situation where factories are going to have to close down just so we can keep people warm. And I don't want to sound so doomy and gloomy, but I'm talking to a lot of experts in the industry that say that could potentially happen. Now, it is, like I say, we're not there yet. Okay, we got a long way to go, and the weather can change, right? And the big question is what happens if the weather changes? Well, then you go back to the scenario where we're producing a record amount of gas and we can build storage very quickly. So this could be one of these situations where, if we flip to warmer than normal, we could see a price crash in natural gas. I mean, we could go from, natural gas, shooting up towards $4 or $5 to crashing back down, below $3. And this is how crazy this market is. I've talked to a lot of people that have been in the natural gas industry for years, traders, people in the industry. And they say they've never seen anything quite like this. Okay. And the other problem that you have is this market, which is always dependent on the weather, this year is going to be more dependent on the weather than ever. Okay. And there were a lot of private forecasters that, were kind of hinting around because of La Nina that this winter could be warmer than normal, that it wasn't going to get that cold. Now we're seeing a big flip in some of those projections. And now we're hearing that, could be colder than normal.
Let me also toss one other thing at you. Mark Fisher joins us regularly talking about the energy market as well. And, he's been talking for a little while now about possibly, part of this trade deal between the U.S. and China that we could be looking at something where we're exporting some nat gas to China, and that might be part of
Hmm.
it as well.
It could be, and I think he's probably right. In fact, today, just today, and I think everybody should leave early because of this. Um, it was announced today that Cheniere opened up a brand new um, a situation for natural gas. They opened a new LNG terminal. So usually, when that happens, I like to leave early and celebrate. I mean, because we weren't supposed to be able to do that, right? We were supposed to be, if you listen to the peak natural gas guys, we're supposed to be out of natural gas by now. Now of course we're opening export terminals. Yeah, I mean the long term fundamental outlook is very supportive for natural gas. I mean, we're going to be, one of the biggest exporters of natural gas in the world in coming years. Um, the impact, though, on the front end of the price curve or the curve that's moving today, I think has a little to do with it. So,
Yeah. So where do we go from here, and how do you trade these markets? Is it through options? Is it through futures?
yeah. Well, what we have done on the future side, roughly, and as you know, we have a bullish long-term outlook on oil. We have since, $25, right? We think we're in a new super cycle on oil, and of course, here we are in a month, we gave up most of the gains. How do you protect against the biggest drop in history? Well, one of the things that we have done, knock on wood, that's helped a lot of people survive this, some even prosper on it, is we'll use a situation where for long futures, we'll hedge it with options. We'll buy some puts, and if the market starts to look really weak, and we'll not only buy some puts, we'll sell some calls, to pay for, give us a little protection. We call them kickers, okay? And if we're putting on a position today, for example, and I'm not recommending that people do this, okay, because futures are risky. You really got to watch this stuff. So, but for example, today, if you thought the bottom was in on oil, what you might do is, buy a futures contract, buy it at the money put, sell a call $2 or $3 out of the money, but also buy a kicker put and call. So, for example, if you do get another 10 or 15 or $20 drop in oil, the extra put, creates kind of a floor that can actually, turn the position into, if not a smaller loser position, could actually turn it into a positive trade. And if the market continues to sell off, you can adjust your short calls down, for example. So we put on some of these spreads near the high, and then oil started to crash. The people with the extra puts did okay. We rolled down, the strike prices on the calls that were higher out of the money. You roll them down, $5 or $10, which obviously, if the market spikes back up, can hurt you. But if it spikes back up, hopefully there will be some time to adjust the position. So we do that to kind of um, to kind of minimize the position. Listen, you can be a cowboy. I've got clients that are cowboys here. I've got guys who'll, scale this thing down until it goes to 25. You got other people that, are very selective on their timing. They've been waiting for a break like this, and they're just starting to buy. If you believe that this oil thing is overdone, a perfect time to buy calls. The calls for the crude oil are very cheap, so it's a good opportunity to start looking at that. Okay. Um, and, I think in the past couple shows on natural gas that we've been talking about it, I was telling people buy puts and calls, because I couldn't tell you. I said if it got cold, this thing was going to take off. And if it didn't, it would crash. And those calls, the calls this morning are just, they've gone astronomical. I
Yeah,
mean,
both
they
sides.
were,
Yeah, exactly.
yeah,
The
yeah,
volatility has just gone astronomical. We're seeing it
yeah,
yesterday with
yeah.
crude puts,
Yeah. In fact,
whereas
some of those
a
crude
few.
calls made up for a lot of the potential losses on the oil overnight. So it's amazing.
Yeah, I mean, looking at nat gas a few weeks ago, the straddle was like 25 cents for an at the
Yeah.
money straddle. We just moved $1 in
Yeah.
overnight.
Yeah. I mean, there were options that were up like over almost $10,000 overnight. I mean, it was crazy. I mean, the futures were up, what, $8,000 per contract on the high today, almost $9,000. So some of those options just went crazy. And what's crazy on the put side, we were just pricing some of the puts, the bid and offers on the put, the market's up $8. The puts were trading higher as well because of the increase in volatility. So, you know, that can be a little scary if you're on the wrong side of the puts. You're like, hey, I'm short puts. This thing's going up and I'm not making money because of the increase in volatility, which also, makes you remember the put side of this equation in our original scenario that we've been talking to people about for the last months is that, even as bullish as this looks right now, it can change on a dime, this market because of the production. So, if the weather changes dramatically, we go, let's say this cold front is all we get and we get into December and, we go into one of those warmer or milder Decembers, the bottom could drop out of this market. So, keep that in mind that this thing could go two ways.
Absolutely. Volatility's picked up, and I think it's going to remain on both sides for the time being
Mm-hmm.
for a number of different reasons. So we'll
Right.
definitely keep a good, close eye on that. Thank you very much. A lot of great information. We
Yeah.
appreciate it. I know you're doing about 1,000 different things right now with all this
Woo-hoo.
volatility. So
Yeah.
thanks for coming on and giving us that information.
You got it, Gerard.
Phil
Yeah.
Flynn of the Price Futures Group and Fox Business Contributor.
You
Thanks. Talk
got
to
it.
you later.
Right. Thanks. Bye.